Global crisis. After all the geopolitical drama, the skies have become a battleground for a different kind of war, an economic one. Air routes, once a symbol of global connection and cooperation, now reflect the tension and division between nations. The European Union, in an attempt to pressure Russia, imposed a series of sanctions. These measures were designed to weaken the Russian economy and force a change in their policies. However, closing Russian airspace to European airlines has backfired, creating unintended consequences for the very economies the measures were meant to protect. European airlines, already facing challenges due to the pandemic, now have to deal with longer, more expensive routes. European airlines are now facing longer routes, rising costs, and fierce competition from rivals who don't face such restrictions. Airlines from Asia and the Middle East, not subject to the same sanctions, are seizing this opportunity to capture a larger market share. The sanctions intended to cripple the Russian economy have boomeranged, striking at the heart of European aviation. Airlines are seeing their profit margins shrink and their operating costs soar. Lufthansa, Germany's flagship airline and a symbol of European connectivity, is grappling with the fallout. The company has had to adjust its operations and seek new routes to stay competitive. The closure of Russian airspace has disrupted their previously efficient routes to Asia, forcing detours that translate into higher fuel consumption, longer flight times, and logistical headaches. These detours are not just affecting Lufthansa, but many other European airlines that rely on fast, direct routes to Asia. This situation highlights a fundamental truth of globalization: interdependence. In such an interconnected world, the actions of one nation can have ripple effects across the globe. Actions taken in one corner of the world can reverberate outward, creating unforeseen and often undesirable consequences elsewhere. Sanctions, while well-intentioned, can have side effects that impact allies and adversaries alike. The aviation industry, with its intricate web of routes and reliance on global cooperation, is particularly vulnerable to such disruptions. The need for collaboration and understanding between nations has never been more apparent, as unilateral decisions can destabilize entire industries and affect millions of people worldwide. Lufthansa, once a symbol of European aviation prowess, now finds itself navigating a turbulent new reality. The airline, known for its efficiency and reliability, faces unprecedented challenges that are reshaping its daily operations and long-term strategy. The closure of Russian airspace has exposed the vulnerability of its extensive network, particularly its lucrative routes to Asia. This closure has not only impacted Lufthansa, but also many other European airlines that relied on these routes to remain competitive in the global market. Flights that once soared through Siberian skies, connecting Europe with major Asian hubs efficiently and swiftly, are now forced to take circuitous detours. These detours not only increase flight time, but also significantly inflate operating costs. The impact on Lufthansa's bottom line is undeniable. Financial figures show a decline in revenue and a surge in costs, prompting the airline to reconsider its growth projections and profitability. Longer routes mean higher fuel consumption, a major expense for any airline. Fuel prices, already one of the largest expenditures, have become an even heavier burden due to these detours. The need to compensate passengers for extended flight times and provide additional services adds to the financial strain. Passengers, expecting swift and efficient service, now face delays and longer journeys, impacting their overall experience. Furthermore, the closure of Russian airspace has forced Lufthansa to re-evaluate its fleet strategy, grounding some aircraft and delaying deliveries of new ones. This reassessment has led the airline to consider reducing capacity and adjusting operations to adapt to the new reality. The situation highlights the unintended consequences of sanctions, especially in a globalized world. Sanctions, designed to exert pressure on Russia, have had a ripple effect, impacting multiple sectors and economies worldwide. While aimed at Russian interests, these measures have inadvertently hurt European businesses and consumers. Business travelers and tourists face higher costs and longer travel times, affecting both the economy and customer satisfaction. Lufthansa's plight serves as a stark reminder of the interconnectedness of the global economy and the need for carefully calibrated responses to geopolitical crises. In a world where actions in one country can reverberate across the globe, it's crucial to consider all potential consequences before implementing drastic measures. The closure of Russian airspace has come at a steep cost for European airlines, forcing them to navigate a new geographical reality. Flights that once took advantage of Russia's vast expanse to connect Europe with Asia are now forced to take longer, more circuitous routes. This geographical restriction translates into a significant financial burden. The most immediate impact is the increased fuel consumption. Longer flights require more fuel, and with jet fuel prices already at elevated levels, the added expense is substantial. Airlines are also grappling with the logistical challenges of longer routes, including crew scheduling, aircraft utilization, and maintenance requirements. For passengers, the closure of Russian airspace means longer flight times, increased discomfort, and potentially higher fares. The inconvenience of prolonged journeys, coupled with the possibility of missed connections and disrupted travel plans, adds to the overall impact. Eastern winds of fortune. As European airlines grapple with the fallout of the Russian airspace closure, their counterparts in other parts of the world are capitalizing on the situation. Airlines from Asia and the Middle East in particular are seeing a golden opportunity. Airlines from countries not subject to the restrictions, particularly those in Asia and the Middle East, are experiencing a surge in demand as travelers seek viable and economical alternatives. They offer alternative routes and potentially lower fares. These airlines are adjusting their routes to maximize efficiency and attract more passengers. Turkish Airlines, for example, has emerged as one of the prime beneficiaries. With its extensive network and high-quality services, its geographically strategic location, straddling Europe and Asia, allows it to maintain connections between the two continents without having to significantly reroute flights. This has led many travelers to choose to fly with them. Similarly, Gulf carriers, already major players in international aviation, are seeing a surge in demand for their services. They are well positioned to benefit from the shift in traffic patterns. With their modern fleets and luxurious services, the closure of Russian airspace has created an opportunity for these airlines to expand their market share and establish themselves as viable alternatives for travelers seeking to connect between Europe and Asia. Airlines are investing in new routes and enhancing their services to attract more passengers. This shift in the competitive landscape underscores the dynamic nature of the global aviation industry and the ability of some players to adapt and thrive amidst geopolitical turbulence. Flexibility and responsiveness are key in these times, and the ability of some players to adapt and thrive amidst geopolitical turbulence. The aviation industry continues to evolve, and those who can adapt quickly are the ones who will succeed. A test of resilience. European aviation adapts. The closure of Russian airspace presents an unprecedented challenge for European aviation, but it also serves as a testament to the industry's resilience and capacity for innovation. Faced with adversity, European airlines are exploring various strategies to mitigate the impact of the restrictions and chart a course for the future. One approach is to optimize existing routes, minimizing detours whenever possible, and exploring alternative air corridors. This involves carefully analyzing wind patterns, airspace availability, and potential partnerships with other airlines to share resources and reduce costs. Another strategy is to invest in more fuel-efficient aircraft, which can offset some of the financial burden of longer flights. In the long term, the closure of Russian airspace may prompt a broader rethink of global aviation networks. Airlines may explore new hubs and routes, diversifying their operations and reducing their reliance on specific air corridors. This period of disruption could eventually lead to a more resilient and adaptable aviation industry, better equipped to navigate future challenges.